We are going to talk Rivian earnings, where the markets are going from here, this upcoming recession, and some breaking news that is coming out just now for Tesla and the EV sector. Get ready and let's get into it. Rivian just announced earnings for Q2 and talk about impressive. A net loss of $1.2 billion. Rivian actually brought in revenue of $1.12 billion, which in comparison to Lucid is almost 8 times more. Yesterday, Lucid had a net loss of $764.2 million and only brought in revenue of $151 million. So out of both dumpster fire earnings, Rivian is definitely the outperformer. And if I were to gamble on which one will ultimately make it to scale, it's going to have to be Rivian. But we still have a major problem. They're losing hundreds of millions, or in Rivian's case, $1 billion every quarter. This is still far from okay and is another justifiable reason Tesla is where it is today. Tesla actually makes profits, about 2 times the amount of net profits as Rivian brought in as revenue. About 2.5 times to be a little more specific. But that did not stop Tesla from selling off over 15% from the day before earnings until today. Something I don't think a lot of people are picking up from Rivian earnings as well that is applicable to Tesla. Unlike Lucid that sells an ultra premium vehicle, Rivian does also sell a premium priced product. But Rivian is in the truck sector. That is the sector that Tesla is breaking into. Tesla has never sold a truck before. Rivian just raised their full year guidance. Rivian now expects 52,000 vehicles to be delivered in 2023. That's more than twice the number they delivered in 2022. And that is an increase of 2,000 today. Previously, investors were only expecting 50,000 deliveries. So in the face of Rivian losing $1 billion and this so-called recession right around the corner, Rivian's raising their guidance. And Tesla is about to break into this new segment of the auto industry that, need I remind you, the Cybertruck already has almost 2 million pre-orders. In the news as well, Tesla has hired Michael Hillbrand to lead the $3.6 billion Giga Nevada expansion. Hillbrand has been working at Tesla since July, and he is an engineer. Tesla is now permitted to expand Giga Nevada's height up to 115 feet to accommodate manufacturing equipment from 75 feet previously. California also announced that during the second quarter of 2023, 1 in 4 new cars sold within the state were zero emissions, which is a new record. Thanks again, Sawyer Merritt, for keeping us informed. Tesla Model 3 Highland reportedly enters trial production in China. A Chinese publication reports that mass production is expected to start in September. And look at the difference here. Sleeker, longer, little bolder kind of facing bumper, sleeker headlights. I like it. Let me know what you guys think down below in the comment section of the Tesla Model 3 Highland. Ray says on Twitter, if priced at 200,000 local Chinese dollars, the demand will be off the charts. FYI, 2 BYD competing vehicles, the BYD Han, starts at 209,800. And the BYD Seal starts at 212,800. Apparently, these estimates that are coming from China, as this article was posted in China, are only valid for left-hand drive units, though with new right-hand drive Model 3s on track to be delivered as soon as this month, according to Tesla's website. So what is coming next for the EV sector as a whole, specifically for Tesla and the broader markets? You're starting to get more signs of this long foreshadowed recession. After all, the single sector that does the worst during recessions is the automobile sector, followed by oil and gas, sports, and real estate. Considering Tesla is a lot of our entire portfolios, I think this information could not be more relevant. Student loan interest will resume starting on September 1st, 2023. About 22 days from now, and payments will be due starting in October. This is the single worst thing that is happening currently for our economy. And if you're betting on a recession, odds are it has something to do with student loan repayments.
But don't forget, everybody in the consumer business had the best years they ever had when 21 and 22 rolled around, because there was so much stimulus money out there. And so you weren't having the business meetings, but the consumer was going out on their own and spending money. And all that business is now pulled back. And it's going to get worse now when all these people have to start. You're taking millions of people that are in the workforce, that are educated, that now are going to have to start paying their student loans again. So you're going to continue to see a huge pullback as we go into the fall, and companies continue to struggle.
Joining us, Matt. People probably know you from Shark Tank. You're an investor. You buy, sell, and build companies. From where you sit, is the economy about to turn down?
I think it is, and I don't think that's a bad thing. I mean, we've been waiting for this recession that we've been predicting for such a long time to get going. Inflation has been stubborn. Consumer spending has been stubborn. And what you're finally seeing is now the consumer pulling back. Costco reported that we're downgrading our meat. The one last holdout, apparently, is travel. So UK, it's a bummer summer, but I think we're going to go out with a bang with a lot of travel spending. And once those credit student loan payments start in July, I think that's the first domino.
That's exactly right. You know, in some cases, we feel like we're getting through that pig in the python, if you will, of the pandemic unwind headwind finally getting behind us. But as we layer in this $400 a month payment that we think many Americans are going to be facing come September of this year, it just looks like a continuation of some of that pressure on discretionary spending that's going to unfold as we head into this all-important holiday season.
Yeah. So I actually think this makes a lot of sense. Consumers have had a lot of discretionary income, and boy, have they been spending it since COVID started and student loan payments were frozen. But I think this time is very different, and I know that is said all the time, but the last time we had a real recession back in 08 and 09, EVs were not around the way they are today. And surely there wasn't a $7,500 tax credit, which on January 1st, 2024 becomes applicable at the dealership to lower the upfront cost of an EV, thus lowering the payment amount that you will pay on a month-by-month basis. These things were not available the last time we had a real recession. But how did Tesla perform during 2008 through 2010? This might shock you. Tesla seen total revenue of $14.7 million in 2008, but the next year's revenue was $111.9 million in 2009, which surged 661% in the middle of one of the worst recessions that we had ever seen. In 2009, at the height of the global financial crisis, Tesla's margin was 9%. By full year 2010, 1 year later, gross margin had improved to 26%. Tesla then went public on June 29th, 2010. Tesla opened the trading day at $19 per share and closed at almost $24 per share, a stellar one-day gain of 40.5%. Tesla then did not become profitable for 10 years. Tesla only achieved profitability in 2020, and they generated $12.55 billion in net profits for full year 2022. Then just 3 years later, fast forward from 2020 to 2023, Tesla has become nearly debt-free in just 2 decades, a feat that's unheard of in the auto industry's more than 1 century history. Given the numbers that you just heard, Tesla did okay during the Great Financial Crisis. They obviously did not thrive like we have seen in recent years, but they're still around today. Ford and Tesla are the only 2 automakers domestically that have never filed for bankruptcy. I think there's proof in and of that itself that Tesla would likely do just fine in a mild recession. Minus 1% or so to GDP is the average consensus for any upcoming recession that we may or may not see in 2024. But what if I told you Tesla stock is already being looked at as we're going into a recession? Volume growth is only expected at 27% for next year, and EPS growth is only expected at 29%. That's a far cry from the over 80% EPS growth that we have seen over the past 3-4 years now, and much worse than the 65% delivery growth we have also seen within the last couple of years. That's on a sequential basis. The deliveries we've seen in 2020 was less than 500,000. Deliveries we're expecting for this year closer to 2 million. So the business itself has increased about 150% in 3 years. Now, why am I even talking about this right now? Well, the reality is Wall Street clocks out for any given year around October. So from now until October, investors are concerned about Q3 and Q4, but once you get into Q3 a little bit deeper, September, October, well, Wall Street starts to pay attention to 2024. And if Wall Street is already expecting this recession for Tesla based on the estimates, and now student loan repayments are coming due in about 22 days from now, that could mean some short-term pressure on Tesla stock. But we're already again expecting a recession. So this almost looks like easy free money from my perspective. Again, for context, the only way this is not easy money is if Tesla sees its worst growth year in about 10 years. You have to go back to 2013 and 2012 to get comparable growth rates of only 27% vehicle growth. I'm not willing to make that bet, even if we see a mild recession. And why is that? A big reason is the Cybertruck and also the refreshed version of the Model 3, not to mention the tax credit that instantly becomes a discount at the dealership of $7,500 on January 1st. That means for your Model 3 today, your base model that goes for about $40,000, well, starting on January 1st, you're going to be able to get a loan to get a Model 3 for around $33,000. That brings down your monthly payment. That makes these vehicles much more affordable. So if you expect Tesla will have its lowest growth rate in 10 years, well, maybe you want to steer clear of Tesla. I don't think anyone watching this video really expects less than 27% volume growth next year. But if you're someone that thinks it's going to come in less than that, you want to stay far away from Tesla. But here in the short term, it doesn't even matter what Wall Street expects or what Tesla's going to deliver. Tesla stock will follow what the broader markets do, and likely do it to a more extreme degree. What we've seen today was the NASDAQ at the worst point, down almost 2%. You did recover towards the end of the day, but you still closed down close to 1%. And it looks like more selling could be right around the corner. The Nasdaq is only down about 4% from its highs that we just recently seen. Your average correction, and what even the chart master Carter Worth is calling for, is a 9% drawback in the broader markets. That would put the Nasdaq at about $350 per share, but depending on economic data and depending on the Fed later this month at Jackson Hole, you could fall more than that, considering you're up about 35% from the lows that we seen back in October. So a good rule of hand is Tesla does about double what the markets do. So if you're in the camp of this is going to be a 10% correction, that means we still have about 7% to go. 6 to 7% likely means Tesla could fall anywhere from 12 to 14% from here. Now, on a numbers basis, a 12% drop is going to put you somewhere in the neighborhood of $220 per share. A 14% drop puts you somewhere around $215. Now, markets can go further than that. If the S&P were to fall 13% from here and call it a 15 to 16% round move, this would really have to be if the recession narrative started to take hold, if growth really started to slow down, and maybe the CPI report this upcoming Thursday is really bad, well, that would mean Tesla could fall about 26% from here, and that would put the stock back at about 180, which in all reality is where a lot of you guys think the stock will go, per your comments down below in the comment section. So that's like the worst case scenario. And that would be the best case scenario for long-term investors. That would give you an opportunity to make this bet in 2024 a lot sweeter. Because if you think today Tesla stock is cheap and is going to do well in 2024, imagine if you could get a discount in the next month or two and buy the stock at 180. You're gonna, don't quote me on this, more than double up in 2024. Tesla stock is down 0.18% in after hours. Quite a small move, but I think you are getting a down move. Well, because the Nasdaq is slightly down in after hours, as well as Rivian not packing that punch that you would have hoped to see, given they did raise their guidance a little bit and beat expectations basically across the board. I think that $1 billion loss to the bottom line really scares people as we head into an economic slowdown. Investors don't like to see the positives in what is kind of bad news, given Rivian's loss was so large. We are also getting news here in after hours that WeWork is warning of remaining, quote, going concerns, and says bankruptcy is possible. Now, WeWork is an office owner. They are the ones that are kind of hit by the commercial loan crisis that is ongoing, that will likely get worse in 2024. The craziest part about all of this is that the spectacular collapse of this company was once valued by SoftBank at $40 billion. The COVID pandemic has led to many businesses to exit their leases in favor of remote work, and subsequent economic slump has left WeWork heavy on debt and struggling to generate cash. Considering Moody's just downgraded US banks today, and part of their reason for it was commercial loan losses, this news could not have came at a worse time. China also is seeing the worst import and export numbers for the country since before the pandemic started. And you're seeing more of a subsequential decline here than what you even seen pre-pandemic. Month after month is getting worse and worse. Even when China was shut down, did the numbers look better? What I find interesting that you might like is the best segment of China's economy right now is, you guessed it, cars. Cars have seen a 4% increase to exports, followed by ships, and then cell phones at 0.2%, petroleum at 0.2%, and then LCD panels, which is what goes in solar panels. As I have reported to you many times, the next biggest catalyst for our markets that will really affect the markets for the next couple of weeks. This is the catalyst that if you're betting on a correction, if you have any trades, you have any hedges, if you're hedging your portfolio like we are in the trading community, link down below in the description of this video, this is the catalyst that will cause the markets to fall. Now, we're getting downgrades from Fitch, we're getting bad economic data out of China, we're getting Moody's downgrading like some of your biggest banks in America today, like 20 of them. And then now we're seeing WeWork pretty much almost going bankrupt. These things we can't forecast, and those are also having a negative impact on the markets and likely will tomorrow. But point is, this is your biggest catalyst we know of from now until the next 2 weeks or so, until we hear from Fed Jerome Powell at Jackson Hole. So what we're expecting here is inflation to remain constant from last month across the board. Core month over month, the same, 0.2%. Inflation rate, your headline month over month at 0.2%, the same as last month. Your core inflation rate year over year at 4.8%, the same as last month. But your headline inflation rate year over year is expected to rise from 3% last month to 3.3% this month. If this number comes in higher than 3.5%, I think your 10% or more correction is almost a guarantee at that point. Almost a guarantee. If you come in at 3.1%, the correction becomes a lot more arguable because inflation really is doing better than expectations. Those base effects even having that negative effect to CPI, if it still comes in around 3%, I think the markets would cheer that. So this is what you need to know about the short-term recession outlooks of what's going to happen with Tesla and the broader markets, as well as the longer term, the midterm, looking out the next couple of months into 2024 and the buying opportunity that you are about to see. I literally choked on air there. Hit the like button because your friend choked on some air over here. That's absolutely crazy. This buying opportunity that you're about to get over the next couple of months and how that's going to set you up for potentially a double up in 2024. Not to mention that we covered Rivian earnings and some of the biggest news stories that came out after the bell today. If you guys like these kind of videos and you like to stay informed or at the very least make a little bit of money, which should be every single one of you, hit that like button and subscribe to the channel. But most importantly, and I mean this, enjoy the rest of your day, and I will see you in the next one.